And welcome to another video chart analysis from freechartvideos.com using time-honored techniques to understand modern markets. This video is for educational purposes only and is not intended to be any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. I'm not a licensed professional. I'm just a guy that draws lines on charts. Let's look at a chart and some lines. We're looking at the S&P 500. We're just going to do a daily update on this. Today, no big whoop. We're still in the channel. We've got these dark green lines that have been holding things in check very well. I revised these lines the day before yesterday when we had this downward move right here. And to my eye, this makes more sense than the previous trend line, which really started off at too steep an ascent. So I'm sticking with this from here on because it now makes a lot of sense. We do have two smaller channels that are within this large one that take us from the bottom to the top. Then they break out, consolidate, then they go from the bottom to the top, and then they break down. And it is my idea that if this pattern holds true, we continue to consolidate and move sideways for maybe a week or so, and then we head back up and we're going to make another run at that top line somewhere in the low 1200s. Today, we actually got over this green line. I was not expecting that. I thought we would come back like we did kind of yesterday, tag that line, and then I was thinking we're going to be down 0.3, 0.4%, just kind of no real big up or down days as we go sideways. But we got up over that for a while, and I believe that added to some volatility. And I think this actually showed underlying strength in the market, that after having violated that line in this smaller channel, that the buyers were able just to push it right on back up in there. But it's not time for that yet. The markets have to absorb shares. They have to be primed for this kind of move, and we really weren't primed to stay above that line. Let's back out. I want to show you what this line and this line mean. This purple line is the neckline to an inverse head and shoulders pattern that formed after the flash crash and after this consolidation pattern broke out, pulled back for a back test, and then started to head back up. Head and shoulders patterns and inverse head and shoulders patterns are some of the most reliable and predictable patterns in all of chart pattern analysis. And you can, interestingly, you can measure the height or the depth of the head. This is a shoulder, head, shoulder. That's why they call it a head and shoulders. You can measure the depth of the head and add that on to the neckline where it broke out, is generally where they say do it. And you can see where I get my 1250 target from. It's right there. Now what about this orange line? Well, let me show you what that is. The orange line is drawn from the top of the bull market in October 2007, and I extended all the way for what? 1, 2, 2.5 years to the top of the April 2010 highs. Now, why would I do that? Well, the reason is that there's still a lot of people who are calling this a bear market rally. I don't think it is. As a matter of fact, since about June and July of 2009, I became finally convinced that this was not a bear market rally because we broke out of a really large head and shoulders bottom. But that aside, if this were a bear market rally, one would not reasonably expect us to be above this orange line because this would be a top, and it would be a top in this trend channel. Well, I take it back, not really a channel, but we should not exceed this orange line. The fact is, wherever you draw this line across a top, no matter where you draw it, we keep making new tops. We keep violating that line to the upside, and we've done it again. So I think that in my mind solidifies this as a legitimate bull market. And I think, like I said, we're going to be going up into the mid-1200s here. If we stop there, I don't know. I've got this line drawn just in case we make a stab at something really outrageous. This bottom inverse head and shoulders down here, by the way, when we look at the neckline of it and measure its depth, we come out with a target that, as I recall, is about a little over 1,300. As a matter of fact, I think, yeah, about 1,300. That looks right. So who knows? Maybe we just keep on trucking here. I hope you've enjoyed the video, and when you get a chance, please take a few minutes to visit freechartvideos.com, and it's a free website. All I ask is that you tell your friends. I'm just trying to generate some traffic. So come by. We're going to have daily updates of the S&P and other good stuff too. Take care.